The market persists and keeps climbing this week, like the little engine that could. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, March 1st. We know that selling or buying a home can be stressful and confusing. This is why we do these weekly videos, so that you can know how the market is affecting you as a homeowner thinking about selling your house, or someone looking for a house that you would love to call home. Let's take a look at how the market performed this past week. There are 15 homes active on the market right now, which is up from the 9 last week. The average asking price of those homes is $2,150,000, slightly higher than the last week's average of $2,121,000. 2 homes went pending this week, 1 less than last week, but the average asking price of those pending homes was $2,048,000, which is significantly higher than last week's average asking price of $1,578,000. And 7 homes closed this week, which was 1 more than last week. The average sales price reduced a little bit to $1,783,000, which is a little lower than the last week's average sales price of $1,852,000. So now that we know how the market performed this past week, we can look at the broader trends that give us insight into its overall health and the potential future direction. Before we do that, if you find this information helpful, you can subscribe down below and ring the notification bell so you don't miss out on future updates. And why not share it with a friend as well? Everyone deserves to be in the know about their local real estate market. So let's take a look at those broader indicators. Starting with inventory, it increased again this week up to 15 homes. A high percentage increase in inventory is usually a sign that the market is slowing down. However, at our substantially low volume this past few weeks of inventory, I think an increase is a good thing for the overall health of the market. Anything under 10 homes will tend to frustrate and discourage buyers, taking them potentially out of the market altogether. The turnover rate has returned to a more reasonable levels. It is still turning over at a higher than normal rate, but not the breakneck speeds that we saw over the past several weeks. 133% of normal market still indicates a very active market, and about 2/3 of the homes that have gone pending in the past few weeks have reported multiple offers, demonstrating that there are plenty of interested buyers out there. The over-under score continues to climb this week as well. We are now seeing houses close at an average of about $93,000 over the asking price, or 5.4% higher than asking. With more and more pending homes reporting multiple offers, that number is likely to continue to climb. The 30-day average closing price dropped this week. We're down to an average of $1.77 million. However, the average pending and listing prices this week are both up in the $2 million range. So I think this drop in closing price has more to do with an excess of lower priced homes coming on the market the past few months. The average closing price will likely break $2 million by the end of the month. The Q Fund continues its slow and steady growth this week. Same trend line that we've been seeing. Unless, of course, you count the Nvidia stock explosion, then it really took off. Overall, a slow and steady growth in this tech mutual fund is the exact kind of movement we expect to see when there are bidding wars happening in our local real estate market. And, as usual, the last metric continues the negative trend we've been seeing for the past several weeks. Interest rates bumped up another 4 basis points. Here we are, staying in that 6 to 7 range. The national average for a 30-year fixed rate mortgage is 6.94% now. The main takeaway this week is that the market is nothing if not persistent. There seems to be plenty of reasons why this market should be faltering a little, especially with the high cost of money paired with the high cost of real estate. But it keeps chugging along up the hill like that little engine that could. The low inventory that is being kept in check by the high interest rates will continue to help push the little engine up the hill, slowly raising home values. And if those rates ever do drop, prompting more sellers to enter into the market, I think house prices will soar, even if there is a sudden influx in inventory. Thank you for joining me for our weekly update. I hope this information helped you understand how the market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell. That way you can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate this stressful and confusing process of selling or buying a home, leave a comment down below or contact us directly. We're here to help guide you every step of the way. Have a safe weekend. We'll see you next week with a new update.